Okay, now we're on to the last video and last homework problem here in our Chapter 1 Excel homework series. And we're going to look at some data, some production data, some cost data for a hypothetical drum company, a company that makes drums, like the instrument, um, and complete steps 1 to 5 below. So one thing I wanted to highlight just real quick first is that this problem does have, additional steps to complete that are below just the screen when you first open it. So be careful with that. With the homework problems, it might be worthwhile if you're ever on a problem and you're not sure if there's extra steps to scroll down on the little slider. You can use the mouse scroller. At least on mine, I have a mouse scroller, or you can drag using the little slider here to see and make sure you complete the whole problem. Okay, with that technical bit out of the way, let's look at some of the data here. So our XYZ drum company manufactured 700 drum sets, so units. We'll call each drum set a unit. And the sales price of each of these drum sets is $600. And then we've got a whole different, a listing of different costs. We've got drum stands that are outsourced, so we're buying those. Factory equipment repair services. It's a flat fee that we pay for repair services. Rent for the cost of equipment for the sales staff. Upper management salaries. Wages of assembly workers. Property taxes on the factory building. And keep this in mind. It will be important because what we're going to do is classify these. One of the important classifications is to be able to understand whether the cost is associated with the factory or more with that admin side of the business, like we talked about earlier. So here, property taxes on factory. So that's important. So just keep that in mind. Accounting staff salaries, factory machine depreciation. Again, factory machinery depreciation. Sales commission. Here we've got multiplying by the number of units, but $20 of sales commission per drum set sold, and plastic for the casing, whatever that means. some sort of raw material kind of thing for making the drums. Okay, so the first row here is filled out. So what we're going to do, step 1, fill in the chart above, classify each cost and its amount as either A, fixed, or variable. So that's first here, and then either product or period cost here. And the first cost is completed as an example. So drum stands, which are a component of the finished drum set, it's a raw material, I guess, essentially, we'd call it. We would take the $17,500 and we'd classify that as variable because for each additional drum set that we create, there's going to be an additional drum stand needed. So when we say variable or fixed, we're really talking about if it's variable, that cost is going to increase proportionally every time we increase produce a new unit. So and it just, if you don't produce anything, you'd have zero cost. But if you produce 700 in this instance, you have 17,500 because you had to buy 700 stands. So that's what makes it variable. It varies in terms of production going up and down, essentially. And then either a product or period cost. I talked about this a bit earlier, but that reflects on whether it's a component of the product. So this is a drum stand, so that will be a product cost. Whereas a period cost would just be something that we actually list as an expense in the current period. Those would be things not associated directly with production. And just to kind of tie it together, if the product costs go into those inventory categories, right, into finished goods inventory, WIP, raw materials, all that stuff, those product costs, those are going into the product, and they will eventually show up on the income statement as cost of goods sold when the product is sold. But a period cost just shows up on the income statement as an expense in the period in which it's incurred. Okay, so let's start looking at some of these and classifying here. So for the first one, annual flat fee for factory equipment repair services, that's going to be fixed. It says flat fee, which is another way of saying it doesn't vary. We just pay this amount every year. And so that's a fixed cost. If you produce more, you're not going to, or less, you have to pay this one way or the other. And the fact that it is related to the factory equipment, we're going to put that in as a product cost. That's one of the kind of key triggers in your mind to start thinking about is if you see factory in the description of a cost, then it's going to be a product cost essentially. It's related to production. If you see office or administration, etc., typically that's a period cost not associated with production directly. Okay. Or if you see sales things here, like this one. So the the cost of renting equipment for the sales staff, that's going to just be a fixed cost. It doesn't vary with production, and it's a product cost, or sorry, a period cost, because it's not directly related. It's a sales related cost, not a product related production cost. Upper management salaries, those are going to be fixed as well. They don't vary with production, and that's going to be a period cost as well. So these will show up on the income statement right away. This one will go into an inventory asset account until that inventory is sold. Okay, wages of assembly workers. So this is like I think talked about earlier. The individuals actually, on the factory line making these products, making the drum sets. And so the more drum sets you make, the more you need to pay the workers essentially. And so we are going to consider that a variable cost. If you didn't produce anything, you wouldn't have any assembly worker wage cost, right? But if you produce 700, apparently you have 60,000, 200 in our example. And then again, that's a product cost directly related to production. They're in the factory assembling the product, the drum sets in this instance. Okay, property taxes on the factory building, variable or fixed. So remember that we're considering if it's variable, if it's directly goes up every time you produce another product. That is not the case with property taxes. You just have to pay those. They're fixed costs. They don't. If you don't produce anything in that period, you still have to pay the property taxes. That's the taxes are not dependent upon production. But since it does say factory building, we're going to have that listed as a product cost because it's associated with production. And just to kind of contrast that, you could have property taxes on the admin building or the, something to that effect, administration building, sales team, building or something along those lines. Though then it would be a period cost if it was. So you can have, just like we talked about depreciation being possibly product or period cost back in problem 1, I believe. So same thing could be true with other costs and expenses like property taxes. Okay, accounting staff salaries. So this one is not associated, you make one more product, that doesn't affect the amount of cost that comes from that's paid to the accounting staff. So that'll be fixed. And it's going to be a period cost, right? Not associated directly with production. Factory machine depreciation. So there's that word factory. So we're going to, maybe I'll just pop that in as a product cost first. And then let's think about, is it variable or fixed? And when we're talking about depreciation, remember, typically we're doing like straight line depreciation. It's not related to, if we produce another unit, the depreciation necessarily goes up. If you don't have any production, you would still have some depreciation on the machinery typically. So we're going to put that in as a fixed cost. There is this type of depreciation called the units of production units. Shoot, I'm forgetting the exact name of it, but it's related to the usage of the machinery. So maybe you could make a case possibly if the company was using that methodology as opposed to straight line depreciation, that it is being driven specifically by the production. But even in that instance, it's not so much adding more costs in as it is to just causing a timing difference into when that cost would be experienced. So, something that's kind of interesting to think about, but it's really going to be more of a fixed cost as opposed to something that every new, like a raw material or more labor that's very directly related to, yep, we're making more products. We need more raw materials. We need more time from our assembly workers to actually create that extra product. Okay, sales commissions. So this one's kind of interesting. So it just gives us a $20 per unit. So we have to do a little math here. So we'll say $20 times, and you can do your times there just if you're not aware with the little kind of star asterisk deal there. So B16, so $20 times the number of units, because um, we're assuming, I suppose, in this one is that we sold all these units, so we're going with that assumption. And so 14,000 in total would be the cost of commissions, and that's a period cost because it's sales. It's sales, or sales and admin versus production. And then what's interesting though in this instance, because we've had all fixed costs related to period costs, I believe so far, but in this instance, we're actually going to have this as a variable cost because it is directly, and I'll just link to this, it is directly related to um, sales, essentially. We're kind of, and again, we're assuming that every manufactured unit is being sold. Um, for simplicity's sake in this problem, but it is every additional sale or manufacturer kind of in this problem, there is extra cost that we incur. So it is variable, but it is a period cost. Okay, and then plastic for casing. So this is a raw material that's going into making the casing, I guess, like the outside of the drums, I suppose. And that's going to be a product cost that we are just it goes directly into the product. Okay, so those are all the costs there. Let's add up the total. So I just did an auto sum up to the top and then drag that formula across, and that'll give us the summation of each column. So our total variable cost, 104,300, fixed 270,900, and we should be able to. Let me make sure I got all these in here. Actually, the summation of those should add up to the same total. So 361,220. Oh, sorry, it's this one. It'll throw us off a little bit because that just shows 20 as multiplying by unit. So the real total cost here would be 20 times, it would be the 14,000 if we were trying to exactly line that up. But actual, when you factor that in, our total cost then become 375,200, 375,200. So we've now classified those correctly, and we're done with step one. Okay, let's move on to step two. So now we're going to use the template below to compute the manufacturing cost per drum. So what does it cost us to manufacture a drum, right? So we take our total product costs here. We can just link into the total there. And the number of drum sets produced, which is 700. And then we're just going to divide the cost by the number of drum sets, and that leads us to a total of $196 of cost that we incurred to produce a drum set. And then again, we're not doing that specifically in this problem or anything, but this is essential information for us to know. So when we go to price our drum sets or just understand what our profit is on selling a drum set, that drives our understanding of gross profit on the drum set, essentially, after factoring in the cost of goods sold. Okay, so let's go on to step three. Assume that 1,000 drum sets are produced next year, and use the templates below to one, calculate the plastic cost per unit in the current year, and then using that data, predict the total cost of plastic for the casings next year. And so the total cost of the plastic casings in the current year, we can just get that from above here, wherever that was, 12,600. Number of drum sets produced in the current year, 700. So then we can kind of do the same thing. This is just a subcomponent of the manufacturing costs. So the plastic is basically $18 per drum set. And then what do we expect to produce next year? As it mentions in the instructions, we think we're going to do 1,000 drum sets next year. We're going to have an expectation that the costs are staying the same, $18. And then we can just multiply those together to say, if we spent 12,600 this year, making 700, doing some relatively simple math, we can deduce that next year we think it's going to be $18,000. So that's what we need to think about when we're doing forecasting, understanding what the future is going to look like, so on and so forth. And yeah. Step number 4, given that we expect to produce 1,000 units next year, an increase of 300 units over the 700, what do you predict will be the total cost of factory building property taxes next year? Okay, input answer into the box below. So we talked about this when we were putting this all together above. And remember, so we look at property taxes, those are not a variable cost. So it doesn't matter whether we produce 1,000 units next year or 700 or zero. Property taxes are a fixed cost and thus will stay the same regardless of production level. And we expect the same cost next year. Maybe I'll put and thus we expect the same cost next year. So no changes there. That's kind of the key thing about a fixed cost, right? So that just kind of gets you this question here is just to make sure you understand that concept. Okay, step number 5, using the template below, calculate the expected per unit factory property cost next year. So per unit is the important factor here. The actual property cost is, property tax cost we expect to be the same. And so here it asks, let's see, our expected factory property cost next year, the same, so 3,500. Expected number of units to be produced, I'll just link that up here, 1,000. And so if we're calculating on a per unit basis, then our fixed cost or our per unit factory building property tax cost is $350. So the total amount stays the same. 3,500 would be if we produce 700 or 1,000. I'll just show you something here. So look at this. So next year we expect it to be per unit 350. This year, because we only did 700 per unit, dividing the 3,500 by less units gives us a $5 cost. So while fixed costs do stay the same, the per unit amount of that is going to fluctuate based on how many units we produced, right? So you produce 1 million units, the per unit of those property taxes are going to be way lower. If you only produce one drum set, that one drum set would have to absorb that full $3,500, and the per unit cost would be $3,500. In this instance, we're going to do 1,000. So we can take that 3,500 divided by each unit to get per unit. And that gives us $3.50 per unit. So kind of, just think about that for a minute. There's always a multiple choice question on a quiz or an exam that'll kind of ask you that about whether variable costs per unit will increase or decrease, and fixed cost per unit will increase or decrease based on production. And it's you got to really kind of stop and make sure you don't answer too quickly, because it's a little counterintuitive that variable costs increase as production increases overall, the total amount of variable cost, because every new product adds a little more cost in. But each product that you produce has the same per unit variable cost because you're just adding that same amount on each time. Whereas the fixed costs don't increase in total when you have more production. They stay the same, like we just saw. But the more units that you produce, you're able to divide that same amount into a smaller per unit total. So anyway, just something to kind of mull over, think about. It's kind of tricky terminology, wording and stuff, but it is kind of an important thing to understand about the behavior of fixed versus variable costs and how that all works from a totals perspective and also a per unit. And then maybe in a way to think about it, the fixed cost, it's like, how much can we spread this out? Right? For variable costs, they just keep adding in. If every new product takes another $10 of plastic, or $18, I guess I should say, the cost of plastic casing, every new unit, just add another $18, $18, $18, $18. So it always stays the same. You don't spread those costs out. They just keep adding on because they're already kind of per unit. But fixed costs stay the same, not per unit related, until you just separate them out, spread it out across those units. So, okay, hopefully that made sense. Let me know in class if you have any questions on that or what I'm talking about, because it is a little counterintuitive. So great. Well, that brings us to our last problem in the Chapter 1 Excel homework series. Hopefully you found this video series helpful. And if you have any residual questions, be sure to bring them up in class. And thanks for following along. Hope you all are having a great day. All right, thanks. Bye.